Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
All right, guys, welcome back to the show. I'm your host, Brett McCollum, and I'm here today with David Hansel. And today we're going to be talking about how he navigates markets as a lender and a syndicator. Pretty cool stuff. Before we do, guys, at Investor Fuel, we help real estate investors, service providers, and real estate entrepreneurs to 2 to 5x their businesses to allow them to build the businesses they've always wanted and live the lives they've always dreamed of. Without further ado, David, how are you, man?
Great. Thank you. Good morning, and appreciate you having me on.
Man, I'm excited to hang out with you, man. I know of one of your businesses I've heard of for a long time. Like, your reputation precedes you, and getting to know you a little bit before the show. I'm excited to do this with you. But
Yeah.
before we kind of get into all of it, because I know we're going to hit on a lot of different things, can you maybe back up a little bit, rewind, give us some history, like, who's David, and catch us up to speed.
Sure. So I'm born and raised in New Jersey. I had a short stint out of state where I worked up in Massachusetts for 4 years, but came back to my hometown, and had gotten into real estate in 2001. I was interesting fact, throughout high school and college, I was a springboard and platform diver, which is an obscure sport. But I like to share that because it's a sport of perfection and about constant improvement.
Uh-huh.
And, it kind of relates to business and how I've adapted over the years. I've married and have 2 kids, both teenage girls. My oldest is going to be getting her driver's license in about 2 weeks, which will be nerve-wracking for me and the wife. But I enjoy spending time with them, barbecuing and playing golf. Those are things that I enjoy. I'm not in shape anymore to do the diving, but maybe I could impress the kids once in a while. But that's a little bit about me. And like I said, happy to be here and hopefully share some good value with your crew here.
Yeah, man. Like, that's really cool. I mean, you've 2001. That's a minute ago. You're a veteran, right? Like, you've seen it. You've been through some stuff. So that's cool.
I always say it's like that insurance company. You've seen it all, but I don't know. But every day there's some new issue that comes up that you haven't seen, that always challenges you, and that's nice to have.
I was gonna say, that's a great mentality to think, like, what, I've seen a lot, but there's more to learn. Like, I think that's incredible. Let's back up a little bit, because it is really interesting, the diving side of it, right? How long were you doing that for? Like was that you started at a young age? Did you, when did that start?
I started in middle school. There wasn't a team, but I had there was a community pool that had an indoor pool and had a diving well to it. So I was just enjoying myself and teaching myself tricks, and then got into high school, we actually had a high school team. The high school I went to no longer carries the team.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
They took out diving boards because of insurance problems in a lot of places. But, went through there, and then I dove at the University of Delaware, when I was in college. But it was my love for the longest time, really, really enjoyed it.
Yeah. I mean, it's such a, I always watch it every Olympics in the Summer Olympics, right? Like when you're watching the diving stuff, and it's so, you hit it, like you're watching these Olympians, like the best in the world, even we know the Chinese team is the best. Like there's a wide gap between them and everybody else, it seems like. But even them, you watch, they're tweaking it they're always refining it. And they're the best in the world. It's an incredible skill set. And I think, let me ask you this, because you kind of touched on that too. Do you think that constant refinement shaped a lot about like how you operate today?
100%. And I love, it's interesting, and I'm sure you've heard it before, but especially in hiring people, it's not a requirement, but I certainly love people that competed in sports, especially at a high level, because although diving is less of a team sport than most, but you're part of a team, you know about hard work, you know about wins, you know about failures and how to persevere. And I feel like it's an incredible trait that helps build you, into a professional. And so every day in both the businesses that I own and run, I'm always looking at ways to improve and do things better, and have kind of built that culture within the companies as well.
Yeah. I was a collegiate baseball player.
Oh, that's awesome.
There's always in sports, that team sports or individual, there's always the game within the game within yourself, right? So that's how I look at it. It's like, what am I doing if it's a team sport like baseball? I was a pitcher though. So like every pitch relied on, every part of that relied on my initiation of it, right?
Yeah.
So, but even inside it, it's like, what is it that the game within myself that contributes to the outcome? And I think that's if you're part of an organization, or if like you're a solopreneur, there's always the game within yourself that we can do, and we should be refining ourselves and growing. And
it's a state of mind. Like there's a famous quote, I'm not sure who came up with it, but the way you do anything is the way you do everything. And so it's kind of like when you're competing in sports, whether you're working at a restaurant and washing dishes, whether you're at a real estate private equity firm looking at acquisitions or operations, you're always trying to figure out how to do things a little more efficiently, a little bit quicker, a little bit better. So, I think that all plays in together.
Yeah. Sorry, we're getting off on a little tangent.
Yeah,
I promise I'll bring it back on the rails here. I have to ask you this. So I would have somebody recording every time I was on like pitching, right? Be it in a practice environment or in a game setting, because I always wanted to go back and watch myself and just tweak everything I could just to refine the process. Did you find yourself as like that at all? Like, were you like the OCD personality of like refinement, or was it?
Yes, but back then there weren't cameras. No, I'm just kidding. No, we did videotape, and was very always, just like I said, because it's a sport of refinement. You'd see yourself, your shoulders leaning a little too far forward or not swinging through your hurdle fast enough or whatever. So it allows you to, and that's probably why I like golf, although I'm not that great at it.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
Yeah.
It kind
The
of
same thing though. Yeah.
same thing, you know?
Yeah. Yeah. All right. Last thing, and we'll move on. You mentioned your daughters, and all same thing. Out of shape, not really. And every once in a while we get to show our kids, like,
Yeah.
Daddy can do it still once. You
Yeah.
know. Last night, kid you not, the true story. My son, he's 11, and a couple of the neighbor kids that are 12 and 13. They're like, "We're gonna play against you," and they're talking all their stuff, And I'm like,
Yeah.
okay. And we're playing basketball outside, just in the cul-de-sac there. And I was like, okay. It felt real good. I'm not gonna lie. To like put it to these little 12-year-olds. I'm not gonna lie. It's like we can do it, but then the feeling you're, Daddy, you're actually good at this. Like, do you ever feel like that? Like when, like in that moment, like, yeah, I can impress my kids once in a while. I still like to do it. Like, oh, that's really fun.
Yeah. Yeah. No, it's always exciting when your kids, especially when they're teenagers, appreciate something that you do, whether it's athletic talent or uh, cooking or,
Yeah,
you know, doing doing whatever it is that you impress your kids, because as they get older, they have less interest in you, so
I'm starting to see that. I'm
you
starting to see it more.
cherish the moments when they do.
Relish it. Yeah.
Yes.
Well, cool, man. Let's do this because we want to talk high level on some real estate things. You've been around, since 2001. You got in, and I've known you from Alpha Funding, right? Can you kind of go a little bit high level on what Alpha is, and then I do want to talk about Lucerne as well.
Sure.
Can you tell me a little bit about that?
Yeah. So as I mentioned, Lucerne Alpha, I launched back in 2007 with my business partner. It was initially a way to invest our own money as a private lender. Realized there was opportunity to put out more dollars, which we didn't have. So we looked at ways to raise capital. Um, and the money that we lent out was for real estate investors that are doing fix and flip, ground up construction projects like that. And over the years we rolled out DSCR, which is your 30-year term products for real estate investors that own rental property. But in the early days there wasn't institutional money in the space.
Yeah.
And so all of it was private. We had raised over 50 million of retail investor capital that we were able to deploy out into the market. We grew that organically by being out at events all the time, speaking, attending, working, obviously, different avenues of advertising. But that company thrives today. We are actively lending throughout most of the country. We're in 44 states. And like I said, we kind of view ourselves as a capital partner to other real estate investors.
Yeah.
They need solid vendors for all aspects of what they're doing, whether it be their roofer, electrician, plumber, their lender. We fit into that cog, into that big wheel with them to help grow and thrive, make their businesses thrive. So that's kind of a little soundbite of Alpha,
Yeah.
what we do.
Well, let's deep dive that a little bit, if that's okay. So, 2007, you jump in. We all know what's coming around the corner from 2007. Did you guys run into any issues on the lending side of it? Like with every investor I've met that went through it was like, oh, we lost our shorts in 2008. Yeah. Did you run into any of that back then?
So thankfully not. We didn't really grow that fast in the beginning, and it was
Okay.
very so we were just putting out a handful of loans here and there, and very purposefully. And we didn't have a lot of capital until we started raising. And then as we are starting to raise more, the market started to come around over the subsequent years.
Cool.
And so we eventually.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Grew obviously over the years. We've had problem loans, but a lot less than most people would ever think. It's these loans are meant for short-term duration to change, improve the asset and get out. And we've obviously had, since that, we've had a good run up in the market. Things are certainly a little uneasy at the present time with where things are going, for various reasons, but we've all benefited from a long growth pattern in the market. So
Yeah.
We've had our challenges over the years, but have continued to grow and be successful.
Yeah. What are some of the, because in my own sphere of influence and stuff like that, what are some of the protections you guys are maybe putting into place, like in the uncertainty times, right? Because fortunately, you've had enough time in business to, have that probably in place. What are you guys doing for that?
I mean, there's a lot of things that we do for that. First and foremost is really understanding the budget and the ARLTV, which is the after repair loan to value. So we want to understand, if the work gets done today, what is the value of it compared to other properties selling in the market. And so those two things, getting that right is important, because if you get it wrong and you're short, and then the market starts moving south, you're in that much more of a problem. But it's also helping to manage the construction and the draws for our
Yeah.
investors in a quick and efficient manner, staying in touch with them if they aren't drawing down, just to see, hey, what's going on, any delays or hiccups? Can we help you at all? Is there anything we can do to help move things along? Sometimes, investors hit roadblocks, and it's good to source ideas from other aspects. And a lender, believe it or not, is a great source for you. And we pride ourselves on trying to help out and do those kind of things with our borrowers. So it's about
Yeah.
managing the draws, when the
That's huge,
assets.
by the way.
What?
That's huge. I agree.
And then even when they're done with the project, getting it on the market, sometimes we've helped provide resources for our investors, and trying to get them to be able to sell the asset in a market and not miss out on time, because time is money.
Yeah.
So there's a lot of different pieces of the puzzle. We look at the individual. We make sure that they're capable of executing a project. Most of them have experience, but we do work with first-time borrowers. We just dialed down the leverage a little bit. So there's a lot that goes into it, and each borrower and deal is unique, but the constant is the value of the asset and comfort with the borrower.
Yeah. Something we've been doing, trying to, on the pivot end of it, just to kind of keep things safe, because we're seeing days on market just skyrocket on a lot of our, here in Florida where I'm at.
Florida is a scary place right now. In certain,
isn't that weird that 2 years ago, you couldn't get a sign in the ground fast enough, and the prices were doubling it felt like every second of the day that the prices are doubling. You couldn't get, you couldn't do, it was actually a benefit for a project to delay a little bit.
Right.
Because, it's like, man, but now it's like things are just slow. They're still selling, but they're slow.
Yeah, each market's unique, and that's something we look at too. Like you said, there are certain markets in Florida that are getting eviscerated, and inventory levels are sky high, days on market are sky high. And so, you know, we'll talk to the investors about it, and obviously we're going to be more conservative on valuations, and we may look for extra dollars in and try to convince the borrower in certain situations. Like I always say that we spend more time talking borrowers out of bad deals than we
Yes.
do funding good deals. And it's important for us because if an investor, not that we can protect them or we know everything, but we have a lot of experience and
Yep.
we can protect them from going into a deal where a market is really starting to unravel. Um, not only does that help us because we avoid help them avoid a bad situation. We want them selfishly to come back and keep investing because that means they'll take on new loans with us. If they get hurt really bad in a couple deals, they may be out of business, and that's not good for us, and certainly not good for them.
Right. Yeah, something we've been doing too. I don't know if how I'm curious your take is taking an ARV right now and just saying, you know what, and then 15% off of the ARV is our new ARV.
Yeah,
And just to say, you know what, like it might be 200, but now it's 185.
right.
You know,
And when the markets are softened, sometimes even price reductions just don't help. People are chipping away. They're like, I don't want to drop, like maybe I'll drop a little bit below the comps, and then the next guy wants to, and the next guy wants to. It becomes an
that
avalanche.
used to be a good strategy too, didn't it? Yeah.
Yeah,
I
but
personally had a deal that went that way where we were our ARV, we felt good. We had a lot of comps at 5.25. And I was like, man, we have a ton of room to play here. Let's beat the market. Let's list it at 479.9. Bam.
yeah,
We
yeah,
because of the market softening. And I said, you know what? It sat for 8 months. And
yeah.
I dropped it until we sold it for pretty it was bad.
It's almost like you want it feels counterintuitive, but in a downward market, you want to make a big price adjustment quickly and get off the market,
Yeah.
but it's a scary proposition. You know, everyone's been winning on deals for so long that there are these markets. And listen, there are other areas that are still thriving,
That's right.
where inventory levels, like there wasn't a plethora of property to build and develop on, like Cape Coral, Florida is,
Rough.
ground zero for a lot of what's happening. You hear about it all the time. And there's just so much new inventory that it couldn't, the market couldn't bear it. And you look for markets where days on market are lower, where inventory, there's a lot of older inventory where it's more rehab than building new. So you got to be cognizant of that. And like I said, lean on your lender, lean on your other sources in the business to get their opinion and feel through some of these potentially challenging situations.
Yeah, guys, rewind that for if you're listening, rewind and listen to that again. Like what he said, call your lender, call people that are in it, like ask for help
Yeah.
because you don't want to try to just figure it out. There's a lot of wisdom in that. And
Right.
I'm pointing my fingers back at me when I say that one, David. Like
Well,
that's
they crowdsource information. You get information from a couple places and you make your best decision, based on it.
don't just try to figure it out. Yeah, that is, like I said, fingers back to me on that one. Lessons have been learned, right? But yeah, okay. So obviously, I love that. Like we could continue talking about that all day. I want to talk about more on that's the hard short-term capital side. But now you've got this other venture going with Lucern,
Yeah.
and that's really exciting too. It is. It's just different. Like explain a little bit, and I'm really
Sure.
curious.
Yeah. So launched Lucerne about 8 years ago. I'll go back to how that got started, but Uh, we're a real estate private equity firm. We've done a fund. We mostly are now doing syndications because of the asset class we're investing in, and the size of the deals that we're doing, and also not being under pressure to put capital out in the market. But we are owner operators of real estate where there's some value add component, be it in management or upside in rents or capex improvements. And we've owned stuff in the Carolinas, Maryland, and up in New Jersey. Primarily, what we are focused on now is small bay industrial or flex warehouse
Yeah.
space. We had, been investing in that for quite some time. A lot of interest is now pivoting into that direction, especially as multifamily has seen some big challenges over the last couple of years with when the interest rates moved up and insurance costs skyrocketed. But we've owned and operated both multi and industrial. And we typically are owning these assets from 2 to 5 years in length. And it's a way for us to gain exposure and for our investors to gain exposure to the benefits of owning real estate, with appreciation, depreciation, and cash flow. And we are thriving now in the industrial space and think that the market has a lot of legs in it, and we're going to continue to grow that and provide opportunities for us and for our retail investors.
I like that a lot. So I've been talking with more and more people that have been saying that too on the industrial space. What is your take on that? Why does that have the legs that it's carrying right now?
Sure. So I'd like to say we got in it before it became hot and we saw what was happening, but there's a lot of reasons why. I can talk about some of the challenges in multi and then kind of talk about how that relates to what we're doing now and why you're finding a lot of folks showing interest in the space. So multi was always a place that was looked as a safe haven for cash flow. You have the ability to mark to market very quickly as rent, tenants are in for a year at a time. You have the ability to improve the asset by putting CapEx and elevate the finish and the amenities of a complex and drive rents. Well, a bunch of things have happened in that space starting back in 21 when the interest rates started to move up very drastically. I may have my dates off, but a lot of these value add projects ran into some issues because of variable rate debt. The cost of money drove up very high, but a lot of other things started to become problematic, right? You had higher labor costs. Quality of labor became very challenging. It's a challenge throughout the industry from the management side, leasing, property management, maintenance, finding good people to stay, even if you're paying up, became somewhat challenging. And then additionally, you had costs that got out of control from utility costs and no secret, the insurance costs, which have skyrocketed and have made major hits to the bottom line on these assets. So there's a lot of issues that are there. There's been a strong demand or need for housing, but there just was too much at one time to get absorbed. And so all this new product that's coming on the market is competing against older product and they're having trouble leasing up. So they've been driving pricing down, offering more concessions. So pivoting over to the industrial, we kind of saw an opportunity to get involved where the small bay, which is really kind of is like an analogy of retail strip centers that are neighborhood retail strip centers for opposed to the big box retailer, is kind of similar to what small bay is to industrial. In the neighborhood retail, you have your Chinese restaurant, the nail salon, a haircutting place, those types of neighborhood retailers that you're going to need and always have. Well, in industrial, the small bay really follows rooftops, and they're service providers and businesses that work and deal with, retail type folks. So you have, your HVAC and plumbing, electric, you have some car related stuff, small distribution, small manufacturing type, where tenants can be 1,500 to 5,000 square feet. Sometimes they're bigger, maybe up to 20,000, which gets into like mid bay. But the interesting pieces of why to invest in it was there's a lack of supply. The zoning for a lot of towns and areas don't allow for new development on industrial. And if they do, they were already built for these monstrous distribution centers, which there may be too much of an inventory. These cannot be repurposed for these smaller, like neighborhood type warehouse tenants that we use as tenants. The other interesting thing is that if they aren't, but we bring a lot of these tenants into triple net leases where all the variable rate expenses are a cost and a burden to the tenant, not to the landlord. So taxes, insurance, utilities, all these things get billed back to the tenant, which allows you for more predictive and stable cash flow. The other thing is that these leases, similar to multi, not a year, but typically will go from a year up to 5 years. So it gives you a chance to mark to market, to move the rents up when leases come due. So there's a lot of commonality of why multifamily investors have pivoted into this small bay industrial. And so that's kind of a high level overview. I'll let you ask some questions and we can dig in a little deeper.
Yeah, I guess the biggest question is, for me, is in an economic uncertain era where industry and we're taking a lot of punches right now, right? The labor market's been funny for a minute, or it's catching up to to us today. Like that's why interest rates and all that stuff, and the yield curve and all that stuff. Like, and it's like I don't know enough about this. This is just a me question. How is it more insulated to go into industrial at this point? Because people still need a place to live, no matter what uncertainty is. But businesses come and go every day because, like in these times.
So again, there's a lack of supply for this type of facility in many markets. And so these small businesses, there may be some that get hurt with what's going on now in the tariffs and the economy. There's a lot of ways to look at it, and we could dive in on the topic. But I do think that, especially with small bay, you have larger companies that may, in the short term, need to downsize and are going to want to fit into some of these spaces. Yeah. So when the economy shrinks or there's problems in the economy, some of the mid-size will look for smaller spaces to downsize. And these other businesses, like I said, some of these service-related businesses, we have auto uses in some of our facilities, and people are going to look to hold cars longer and do more repairs because of some of the costs that are going to be associated with it. All of these pieces come into play. And so some of our tenants will actually thrive and do well. Others may not, if they're import and distribution, but those may get picked up by others that may be downsizing. But the vacancy rates remain extremely low in the markets that we are in. We fill up these vacancies very quickly and hope that will
because of that lack of supply, right? That makes a lot of sense. Yeah. Interesting. Yeah, I was just very curious because I'm like that on its head. Like I wasn't thinking about supply. I was just like, man, it's really economically that makes a lot of sense though. But man, I know you and I could just keep going back and forth on this. There's so much. 30 minutes is not enough. You know what I mean? I wish there were, but if people want to connect to you, learn more, that sort of thing, be it Alpha or Lucern, what's the best way to connect with you?
Yeah, so I'll give you a couple easy ways to reach out. Probably the easiest way, if you're on LinkedIn, it's David Hansel, Hansel, from Alpha Funding and Lucern Capital. You can message me there, and happy to set up a call and talk to you, answer any questions you have. You could also visit one of our two websites. The Alpha website is alphafunding.com, ALPHA funding.com. And we have there are a couple ways to message in. We have a bot on the site that'll come right in directly to us. The same thing with Lucern. It's lucerncapital.com, LUCERN capital.com. And happy to answer questions or help out where I can.
Perfect. Yeah, guys, we're going to make sure that's in the show notes for you and everything there. So I certainly encourage you to check that out. But before we go, David, I just want to say one more time, man, I appreciate you hanging out with me, spending the time and going deep on some of these topics. Again, wish we had more time.
Yeah.
Sorry,
man, I'll come back if you want.
Yeah, man, this is great. So, all right. Well, guys, thanks for hanging out with us. I appreciate you taking the time, and we'll see you guys on the next episode. Take care, everybody.
Thanks.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.